So you want to make some money with crypto? You have the opportunity to buy tokens before we go on the exchange, and token price will skyrocket right after the listing. So you just repeat the cycle an infinite number of times and make money. NFT is a huge topic, and I made more than $10,000 in 3 months from scratch. You could try to speedrun the game and earn $750 or more, simply playing 1 hour a day. Futures or leverage trading is the easiest way to lose all your money, but I personally know a guy who made about $75,000, so you should be ready to lose all of your money one day. Well, if you don't know how to do it, you might think that the list of ways to earn money with crypto looks something like this. But what if I told you that there are this much ways to make money with crypto, and some of them are free to start? So you don't even require any amount of money to start earning with crypto today. You don't necessarily need to know how Bitcoin or cryptocurrency works, because it's pretty easy, and most of methods to earn money with crypto don't require any specific knowledge about blockchain technology. Anyway, in this video I will teach you everything you need to know to start making money with cryptocurrencies, so you can earn hundreds and thousands of dollars from scratch. Or you can simply create passive income by investing your money in crypto. There are only 4% of all population of the world that use cryptocurrencies right now, so you are still very early to make huge profits. The best thing about crypto is that average young person can almost guaranteed become a millionaire by 30s simply investing or trading low-risk cryptocurrencies like Bitcoin and Ethereum, using some strategies that I show you later. Finally, cryptocurrencies allow you to be independent of your location, so you can travel around the world while you're making money. And with this being said, I clearly don't see any reason you shouldn't start using crypto today. So let's dive into a study of the crypto world. So how do we start? First of all, we should understand what we will need to interact with cryptocurrency. As you remember, there are more than 16 ways to make money, and depending on the way you will choose, you may need different tools. But you will definitely need the following 3 components of Web3 world, without which it's nearly impossible to exist. First one is the Web3 wallet, the second is an account at one of the popular cryptocurrency exchanges, and the third is a bank account or credit card that will be used to exchange fiat money into cryptocurrency and vice versa. So why do we need all of them and how to use it? To understand it, we need to know how blockchain technology works. Quite frankly, it's pretty simple. Basically, blockchain is a huge list of transactions that users make to manage their funds. There are a huge number of blockchains, such as Solana blockchain, Ethereum blockchain, Polygon blockchain, and so on. Each blockchain operates on its own network in which transactions are made. Because of these networks, depending on the blockchain, cryptocurrencies from other blockchains can exist in it. For example, Ethereum token created on the ERC20 protocol, which is built on Ethereum blockchain, can exist both in the Polygon network and in the Ethereum network, because the networks are compatible, so you can transfer ETH tokens from Ethereum network to Polygon network using special bridge. However, not all coins are compatible with each blockchain network, so for example, it is impossible to transfer funds in Solana tokens from Solana network directly to Ethereum network, because their coins are built on different protocols. There are 2 types of cryptocurrency wallets: one-chain wallet built on one particular network, for example Ethereum wallet, and multi-chain wallet, which allows you to store almost known cryptocurrencies in one place. I suggest you start using multi-chain wallets right away, because they are much more convenient and practical. The 2 most famous multi-chain wallets are MetaMask and Trust Wallet, and I highly recommend you to use both of them, because Trust Wallet is most secure solution and MetaMask is more popular and convenient in my opinion. Let's create our first cryptocurrency wallet together, step by step. At first, we need to install an extension in our browser, since MetaMask is a Web3 wallet. I advise you to use the link in the description, because a lot of scammers create phishing sites to steal your money, so be careful and always check out your link. It should look like this. When you get to the MetaMask site, click on the download button and choose your browser version. You will be redirected to this page. Always check out amount of users and votes to understand that it's the real application. Then download the extension. Here you will be offered to restore your existing wallet or create a new one. Since you don't have a wallet yet, we will create it. We should create a password here. Here is a small video about your wallet security. You can watch it if you want. Now here you should be careful with your secret recovery phrase, which is a private key to your wallet, so you should never ever share it with anyone. Otherwise your funds will be in danger and our person will be able to use it. So I advise you to write it down on a piece of paper and keep it in the safe place, where nobody will be able to know it. Here we should confirm the secret phrase. Once again, it is your key to your wallet, so you must keep it private and safe. Congratulations, you just have created your first crypto wallet. Now you can use it to almost all necessary cryptocurrency activities. As you can see, there are some strange symbols right here. It is the public address of your wallet that you can copy by clicking on it. This address is public and it's used to send funds directly to your account, so you can share it with anyone you want. In the upper right corner you can see the name of the network you are currently viewing. There is only Ethereum network here, so I suggest you to add 2 more important networks that you may need in the future. You can just repeat after me or copy these parameters from the description. We have now successfully added the Binance Smart Chain and Polygon network to our MetaMask wallet. If you need to add any other networks in the future, you can use chainlist.org, where you can add almost any existing network to your MetaMask. By the way, you can find a link to a chain list in the description. Now let's get back to our wallet. As you can see, MetaMask has the same public address regardless of the network. Normally, a wallet's public address depends on the network that the wallet is on, but because MetaMask is a multi-currency wallet, that means that your public address is suitable for any network that's compatible with MetaMask. Now you can also create a new Trust Wallet account for your smartphone by yourself, because the process is pretty similar, so you can do it if you want to store your funds in a more secure wallet. But MetaMask is more than enough to start with, so it is not negotiable. Also, if you really want your funds to be as safe as possible, you can buy a hardware ledger wallet, which is one of, if not the safest way to store cryptocurrency, but it costs money and quite frankly is unnecessary for the average user. But if you really want to buy Ledger, you can do it by following the link in the description. Now when we have our brand new wallet, we can create an account on the exchange. There are 4 biggest cryptocurrency exchanges that I recommend you to use, such as Coinbase, KuCoin, Kraken and Binance. They have some differences and specific advantages, so KuCoin for example has relatively low fees, while Binance is the biggest and safest one in my opinion. You can use any of these 4 by following the link in the description, but for this tutorial I will use Coinbase because it's my personally favorite one. By the way, you will get $10 in Bitcoin for free if you deposit at least $100 using my referral link, so it's the best way to start. Now let's create an account on Coinbase. When you will follow the link in the description, you will get to this page. You must enter your real name and fill out this form. After that, you will need to verify your email address. Here you will be offered to receive personalized email updates, so you should choose it if you are interested in it. Now you need to enter your phone number, which will be used to protect your profile with 2-step authentication. If you already have some cryptocurrency, you can transfer it from your wallet. If you don't have it yet, just skip this step. You have successfully created your new Coinbase account. Now you have to verify your identity to be able to use most of necessary exchange functions. Just click at this button so you can complete KYC process. KYC stands for Know Your Customer, and this process is needed to verify your identity and protect Coinbase from illegal activities, money laundering and financial fraud. So you can choose one of these 3 ways to verify your identity. Then you have to choose one of these methods that you like the most. I have chosen verification by passport using my smartphone camera to take picture of it. If you have done everything correctly, after a while you will receive a message about successful completion of KYC. Now you have all the tools you need to start using cryptocurrency. Let's convert some of real money into cryptocurrency so that we have funds on the balance sheet. Don't worry if you have no money to start with. Later I will show you some ways to get your first money in crypto for free. But I recommend you to start with at least $10 just to be able to gain some investment experience. There are multiple ways to buy crypto, but we will use the simplest way to do it by depositing some fiat funds from our credit card. First of all, we have to connect the funding account. To do so, just go to Settings, Payment Methods and click on Add button. In this window, you can choose a convenient method of depositing. You can simply use a credit card or a bank account. Then just go to the Trade tab and click Buy on the cryptocurrency you want to get. Here you can buy, sell or convert your cryptocurrency. Enter the amount for which you want to buy cryptocurrency and you can see how much cryptocurrency you will get by exchanging your fiat money. The cryptocurrency will be credited to your wallet shortly after purchase. Now when we have some money on our balance, we should think a little about security in a crypto world. I won't give a lecture about the safety of your money, but I will advise you a few recommendations and golden rules, without violating which your funds will be as safe as possible. First of all, never rush. If you don't sure about something at 100%, it's much better to recheck everything one more time. This applies both to interaction with cryptocurrency and investment decisions. There were a huge number of cases when people lost all their money due to inattention or haste, so be careful and always check all the data when you transfer cryptocurrency to someone. Wallet address, network, amount of commission, etc. The second rule is always check out websites you are visiting. There are tons of phishing sites in crypto space, so it's quite easy to give your passwords or the data to intruder and lost all of your money in one moment, so watch out. Remember that sites URL have to start with HTTPS, not HTTP, because the first one has secure connection. The third rule is never connect your MetaMask or any other Web3 wallet to a site that you see for the first time and don't sure about. Actually, it's one of the easiest way to lose money in crypto, so beware of connecting your Web3 wallets to random sites. And also never sign up suspicious MetaMask messages, because it can be dangerous. The fourth rule is to never save your secret recovery phrases on your computer, on your social media account, or anywhere in the digital space. It's much safer to keep your secret phrases in a notebook or on a piece of paper. The fifth. create unique password and email address for each crypto exchange and always use two-factor authentication. This is necessary to prevent intruders from gaining access to your exchange accounts in case of data leak from other online resources. And two-factor authentication is the most necessary thing when we're talking about account security, because even if intruder gets all of your data, he still won't be able to steal your money. The last but not least, diversify your assets. Never hold all your money in one exchange or one wallet, unless it's a hardware one. Remember that any popular exchange can be hacked, bankrupt, or even end up fraudulent, so keep huge sums of money only in personal hardware wallet, and the smaller amounts can be kept in exchanges or Web3 wallets. Let me show you some ways to protect your Coinbase account. Go to Security section in Coinbase settings. Make sure you have this feature enabled, because it will immediately let you know if someone accesses your account. Then click here to enable two-factor authentication. You can download the usual Google Authenticator from Web Store or Google Play, or you can choose any other authenticator that you like. I recommend you to put a checkmark here and click on Save button. Congratulations, we just finished all the preparations and now we can finally move on to ways to make money with crypto. Let me remind you that there are at least 15 ways to make money with cryptocurrency, but in fact the number of variations exceeds that number, and in Web3 world everyone can find an occupation that will bring him income, whether he is a gamer, content maker, investor, developer, community manager, trader, or just a regular person who wants to make some money. If you are persistent enough and willing to put in the effort to adapt to the new world of technologies and develop your skills, I suggest you start now. And last but not least, don't rush to invest in cryptocurrency more than you're willing to lose. In the last 4 years I have come a long way in Web3, and like nobody else I know how important it is to learn from others' mistakes and not to repeat your own. So be ready to lose your first money if you don't have enough experience in investing and understanding the market. So let's start our journey right now. The first way to make money that we will look at is investing. Even if you won't get into cryptocurrency and after a while decide to leave it behind, you will get an valuable experience of investing, spreading to all major world markets. As with all methods, I won't dive too deeply into investing, because quite frankly this is a topic for a separate video, as are most of the methods on our list. However, I will cover the essence of the method and tell you the most important things to get started. If you would like me to make a separate video about a particular method, write about it in the comments. So what is investing? Basically, it is the purchase of an asset with expectation that it will yield a profit in the future due to an increase in its value or dividends that it will bring to the owner. If you look at cryptocurrency as an asset, there are several ways to invest your money. The first is the direct purchase of a particular token in the hope that it will grow. The second is the same purchase of a token and then distributing that token to a staking protocol or a liquidity pool, which will give you a reward in the form of an increase in your tokens as a percentage. And the third is the purchase of a particular token to gain privileges or opportunities to invest in other tokens, which can lead to enormous profits. We will consider the second and the third ways a little later, but the beautiful thing about cryptocurrency is that all three methods can be combined to maximize profits. And it doesn't always carry a lot of risk, and is often a very safe way of investing. Let's look at the mechanics of market and understand how we should behave in order to make money investing in cryptocurrency. First of all, there are two phases of global market, a bull market and a bear market. A bull market is a phase of rapid growth, accompanied by a huge amount of media noise. You may remember the cryptocurrency boom in late 2020 or early 2021, when Bitcoin rose to its previous all-time high of $20,000 and then made it to 60,000. At that time, Bitcoin and cryptocurrency in general were on everyone's lips, and everyone urged you to invest all your money in Bitcoin before it was too late. A lot of analysts were predicting a Bitcoin price of $100, $200 or even $1 million per coin. But what came before this growth? Almost 3 years of bear market when nobody talked about Bitcoin and when a lot of people lost their money by buying Bitcoin for $20,000 and sell it much cheaper afterwards. From this we can conclude that it's profitable to invest when no one is interested in cryptocurrency and sell more expensive when Bitcoin is on everyone's lips and has already made us a good interest. But how do we know when to buy and when to sell? Because we can buy Bitcoin at $20,000 and when it will fall to $10,000 and we will lose 50% of our investment. If we look at the global picture, we can clearly see that there are always two types of people who win in investing: long-term investors and early investors. If an asset is not useless and have some practical value, then no matter what the phase of the market it is, bear market or bull run, long-term investors always win, because they don't sell their assets until its price is significantly higher than the price they have bought it. So the golden rule of investments is always invest in the long term. Moreover, long-term investors buy more when their assets fall in value, thereby averaging the purchase price and lowering the entry cost of their asset. Let's look at the example. Let's say you want to buy Bitcoin and its price is $40,000. You decide to buy $100 worth of Bitcoin every month, no matter what price Bitcoin will be. Here what will happen. Suppose Bitcoin starts to fall in value sharply. In 1 month it falls to $31,000, but you are not afraid of that and buy even more Bitcoin for $100. A month later Bitcoin drops again and is now worth $26,000. You buy more Bitcoin and here's what's happening. It turns out that in 3 months you invested $300 in Bitcoin, each time buying Bitcoin at different price. Now you have this much of Bitcoin and it costs $248. Note that if you had bought Bitcoin only once at the most start for $300, you would now have less Bitcoin and it would be worth only $195. This is because the average price when buying in installments is $32,333, and the average price of a single purchase remains unchanged at $30,000. Thus, we lost less money, gained more cryptocurrency, and bought Bitcoin at a lower price than we had originally planned. Now, if the Bitcoin price reaches $32,333, we will break even. While we were one-time purchase, we would still be at a substantial loss and we would need a Bitcoin price of $40,000 to get back our investment. Now when the price of Bitcoin reaches $40,000, we will already have a profit of $82 with a balance of $382. But what if the price of Bitcoin never goes up again and we will lose all our money? Well, that possibility exists, but any kind of investment has that risk, so you should be ready to lose all of your money one day. But don't be afraid, Bitcoin can't fall below a certain point mathematically, because for this to happen, the big players, called whales, need to sell their Bitcoin. By whales I mean global giants such as Tesla, BlackRock, Amazon, Facebook, Google, and many other companies and billionaires like Elon Musk. So this is the best investment strategy that you can choose as a beginner, because you will learn to be patient and most likely not going to lose your funds. So the second golden rule of investments is never sell good assets below the price you bought it. But what cryptocurrency should you invest in? There are thousands of different cryptocurrencies, so how can you choose the one that will grow the most? Well, actually it's not the point of investments. There are many different coins called altcoins in addition to Bitcoin. The good thing about altcoins is that a lot of them follow the movement of Bitcoin. The only difference being that if the price of Bitcoin changes by 3%, then the price of an altcoin correlated with Bitcoin can change in the same direction by 10%, making altcoins more volatile. The high volatility of altcoins gives you the opportunity to earn more money, but also increases your losses if the price falls. Also, altcoins are a much riskier vehicle for investing, because unlike Bitcoin and Ethereum, most of them have the property of dying with a bear market and never growing back to their peak values. Just look at the top 10 altcoins in 2017 and 2022. Of the 10 coins that were at their peak price in 2017, only 2 were able to surpass their previous all-time highs in 2021 and 2022, and they are Litecoin and Monero. All other coins could not even reach their previous historical maximum. So in the long term it is quite reckless to invest in top altcoins, especially if the coin you want to invest in is not something really meaningful or useful. So the third golden rule of investments is never invest in weak or overrated projects. The last thing that I will mention about investing is that you need to know why an asset is worth anything at all, and why, for example, Solana is worth much less than Ethereum. This is actually a big topic, but in a nutshell, the 3 main things that determine the price of an asset are available supply, market cap, and demand for the asset. The supply of an asset is literally the number of tokens people can buy, and it's often limited. The less coins that are in circulation, the higher price of an asset can rise, if there is enough demand for it. For example, Bitcoin has a huge demand, because there are millions of people around the world who want to buy it. But its supply right now is only 90 million coins, a large number of which belong to people who are likely to never sell most of their Bitcoins, which further reduces the circulation supply. Only 21 million Bitcoin coins will be ever created, and the demand for Bitcoin and cryptocurrencies in general will only grow over time. So right now Bitcoin already worth around $20,000, and perhaps one day its price will reach $1 million per coin. The last thing that affects the price of an asset the most is market capitalization, which is the total amount of fiat money invested in an asset. The higher the number, the higher the price of the asset, due to investors' demand. Bear in mind that an asset must have some fundamental reason why its price is fair enough, based on the utility it provides. For example, Ethereum has its own huge ecosystem built on its blockchain, which millions of people use every day, so its price is reasonable relative to the tokenomics and demand for the asset. But if an asset is useless or doesn't provide any value to its owners, then its price should be very low, even if it has good tokenomics. Now you are ready to start investing because you know the basics and you can buy cryptocurrency for the amount you want on the exchange. If you are planning to invest a large amount of money for a very long period of time, I strongly recommend you to transfer all your coins to a separate wallet instead of storing them on the exchange. I will show you how to do it on Coinbase. First of all, click on Send button right here. You can choose any coin that you want to transfer, but I will use Ethereum. Just copy your MetaMask address in Ethereum network and paste it right here. Then you can just click at this button and type in how much cryptocurrency you want to send. After that, you will see a confirmation page where you will see how much money you are going to send. Then you just need to enter the verification code from your smartphone and the money will be withdrawn to your wallet. The next way to make money with crypto what we will look at is trading. Actually, trading is pretty similar to investing, but it can be more dangerous and it's much more stressful activity. Trading can be active or passive and have leverage element in it, which usually increase your profits, but also can make you lose all of your money. The first way to make money with cryptocurrency trading is just actively buying and selling cryptocurrencies at an exchange without any leverage to gain some interest from price changes. This can be effective if you create your own trading strategy that will consider risk management, and if you want to trade unknown coins that can be potentially scam projects. Don't forget that buying any altcoin with all your money is very risky. Just remember what happened to Luna coin and how much money some people lost overnight. It can happen to you as well, so never all in any altcoin. But if you like to use all of your money to gain profit, you can buy Ethereum and Bitcoin on 80% of your funds and keep the remaining 20% in stable coins, the value of which is about $1, in order to buy some more cryptocurrency in case of a big drop. It is one of the safest trading strategies and I like to call it smart investing, because you are basically doing the same thing as in long-term investing. When Bitcoin or Ethereum gives you a significant increase in profit by reaching its all-time high, you gradually sell more and more of the asset. And after the complete sale of the asset, you wait for the next big drop in price by several times, so that with the increased money you can buy Bitcoin and Ethereum at a very low price and repeat the cycle. The only difficulty here is to calculate the best moment to buy and sell, but as we already know, it's almost impossible. That's why we keep about 20% of our funds in stable coins to always have an opportunity to enter the market on more favorable conditions. You can also trade some altcoins that are stable enough and repeat the Bitcoin price to make more profit than just trading Ethereum and Bitcoin, but it requires a lot more skill and understanding of the market than you might think, and obviously is more dangerous. The second type of trading is short-term trading. In the brief, there are many situations where the probability of growth or decline of particular cryptocurrency in the near future is extremely high due to certain events. An example would be news related to a particular cryptocurrency or upcoming IDO or similar activities, which we will talk about later, which will be accessed with a separate token. For example, some large company may announce its intention to buy a large amount of Ethereum, and its price will probably immediately go up. But the point is that very often such events can be anticipated. For example, the tokens of IDO platforms almost always rise by 5 to 20% before the upcoming token sale of a new project. And after the sale, they fall rapidly by the same or even higher percentages, and you can earn on the fall as well. To do this, you will need to use futures contracts on the exchange, so you can short the cryptocurrency, thereby earning on its fall. So we are smoothly moving on the third way of making money with trading, which is futures trading. Futures or leverage trading is the easiest way to lose all your money, so you shouldn't even think about it unless you have at least 1 year of active trading experience. Otherwise, leverage trading becomes a crypto gambling for you. Futures trading is a type of trading in which you are not buying an asset, but a contract to buy an asset at a given price at a given point in time. In other words, you don't own the asset. Roughly speaking, you bet on the rise or fall of a price in the future, relative to a price in the present time. There are two types of futures contracts, open-ended and time-limited, and I advise you to choose open-ended futures, because you have more control over the situation and they are easier to understand. Thus, if the price of the asset goes in the direction you have chosen, the price of your contract will increase, and you will be able to sell it at a higher price. Now listen carefully. I know a lot of people who have lost so much money on leverage trading, and I have lost about $500 myself. So I really hope that you will be patient and learn from other people's mistakes. But it wouldn't be fair if I didn't mention that I personally know a guy who made about $75,000 in 6 months with leverage trading, and then bought himself a new Mercedes. If you really want to make leverage trading your job, get ready to experience a tremendous amount of stress every day, and spend almost all your time watching charts and the price changes. Now let's look at some basic theory, which will be extremely useful in trading practice and also in investing, because it will help us to choose our entry points better. First of all, let's find out what charts are and how to understand them. You may know that any charts consist of red and green bars, called candlesticks. They carry a lot of information, but the most important thing that you should know about them is how to read them. A candlestick may consist of 1 or 2 parts. The first is the body, which is represented as a rectangle, and the second is a shadow of a candlestick, which shows where the price reached in a certain period of time. To read a candlestick, you look at the direction of the following candle and at the color of the candlestick itself. The colors may vary depending on the platform, but you can always tell the price movement by the direction of adjacent candles. If you are looking at a traditional chart, green candles indicate an increase in price and red candles indicate a decrease in price. If the candle is green, that is rising, then the lower part of the candle will show the opening price and the upper part of the candle will show the closing price for a certain time frame. And vice versa, if the candle is red, which means it's falling down, then its opening will be at the top and the closing at the bottom. The time frame is the period of time displayed on the chart. There are a large number of time frames, and one candlestick on the time frame shows a specific period of time. This means that one candle in a 5-minute time frame is equal to 5 minutes, and one candle in a day time frame is equal to 1 day. The larger the time frame, the more global picture is shown on the chart. Large time frames are great for active trading and for investing, because they show the global trend of price movements. The trend is the general direction of price movement. Trends can be global and local. Local trends are less reliable, but they often signal good entry points into the market. The chart has 3 stages: an uptrend, a downtrend, and a consolidation. An uptrend can be seen when buyers dominate the market and the volume of purchases greatly exceeds the volume of sales. Conversely, when the market is dominated by sellers, the price falls because sales volumes exceed purchases. A consolidation is a period in a chart when the price is oscillating in a certain range for a long time and stays within that range. Consolidations usually take place when the market is not dominated by any side and market participants are not sure which way they want to push the price. Consolidations can be seen near support and resistance levels. The support level is a price range from which price pushes upward, and the resistance level is a price range from which price pushes downward. To find the support level, you can draw a straight line or an area that will start with the bottom of the candle's body and end with bottom shadow of a candle. The same can be done for the resistance level, but this time the beginning of area will be the top of candle's body and the end will be upper shadow of the candle. I usually use the line to mark the support and resistance levels, but the area is more informative. As we can see here, the price is pushed back several times from the $29,000 price range, which means that $29,000 is the support level for the price, on a fall to which the price is most likely to go up. However, that doesn't mean that price can't break that support level and go lower, but if you look only at this factor, a price breakout is less likely than an upside bounce. It's the same with the resistance level, where price is most likely to push back down several times before breaking through. Support and resistance levels exist on all time frames, and the larger the time frame and the more times price has pushed back from the level, the more reliable it is. There are also fake level breakouts, where price moves outside the level and then quickly moves back behind the level. When a support level is broken downward, it becomes a resistance level on a future rise, and vice versa. When a resistance level is broken upward, it becomes a support level for price on a subsequent fall. Support and resistance levels are often used in leverage trading because they are excellent entry points into positions on the breakout or rebound. But they are also a great reference point for long-term investing because sustained levels on longer time frames often indicate highs and lows in an asset's price. Now let's talk a little more about candlesticks and how they can help us understand market movements better. There are a huge number of candlestick patterns which determine the subsequent price movement. Patterns don't work in all cases, but they do reflect the relationship of buyers and sellers in the market, which makes them one of the signs to enter a position. The most important thing that you should know about patterns is that they almost never work by themselves, and in order for them to work, there must be several other factors to confirm the pattern. A pattern is the sum of several candles, but sometimes even one candle is enough to understand the mood of the market. Patterns work on all time frames, but the larger the time frame, the more reliable the pattern. For example, on time frames below 1 hour, there is often chaos and sharp price movements, so we should not focus only on patterns in this case. I won't tell you about all the patterns, because there are hundreds of them and you don't have to know most of them, because they are the consequence of the general situation on the market. And if you understand why the price behaves one way or another, then you can read the pattern even if you don't know it. Still, I advise you to memorize visually the following few patterns, which are the most common and classic ones. When memorizing patterns, you don't need to be guided by their names, as their names are useless. It's much better to remember what they look like and what they mean. Also, an important rule of thumb is that in candlestick analysis we compare the size of the candles relative to each other. This means that the biggest candle will be the one which is bigger than the others in the same time frame. The first candlestick that we have here is a candlestick with a huge shadow on the top and bottom and a tiny body. It indicates that the participants are not sure where they want the price of the asset to move, so there is a lot of uncertainty. This candlestick may signal a change in the local trend if it's also indicated by other factors such as resistance or support level, global trend, general market conditions, etc. Also, such candlesticks are often found in consolidations, and in this case you should not rely on them. In general, if you are an active trader, it's better not to take a position when the market is in a local consolidation phase, because the price movement in this case is less predictable. The next in the queue is a candlestick that either has no shadow or has a small shadow on one of its sides, and completely engulfs the previous candlestick. For example, if the previous candle was a rising candle, then the candle following it should be fallen, with no shadow on the top, and completely overlap the previous rising candle, sometimes even overlap it by several times. Such candlesticks can be either rising or falling, and they often indicate a sharp change of trend. Another type of this pattern is a candle with a huge shadow on top or bottom and a tiny body. In this case, we can also consider this candle as a potential reversal of price movement. The next in line is a set of candles, gradually tapering into a triangle. Almost always this pattern is followed by a strong price impulse in one of two directions, and the last pattern that we will look at is the head and shoulders. It may be directed either downward or upward and looks like this. This pattern also means a trend reversal. So what were the basics of technical market analysis? And if you use all of the above in combination, the chances of successful trading increase significantly. Traders usually enter a trade if there are 3 or even more good reasons to enter a position, and there are no contradictions, so never enter a trade based on just one trade. Now we can move on to practical trading, and at the same time I will show you how to use the futures trading. For this I will use Binance Futures, as in my opinion it is the most convenient platform for leverage cryptocurrency trading. As a reminder, you can create an account at Binance using my referral link in the description to get some extra bonuses. And by the way, everything I said before applies to regular trading as well, so you can use technical analysis on spot trading at first to learn more about market. To get started, you will need to open a futures account at Binance. To do this, click Derivatives and select USDM Futures. You will be asked to take a test about leverage trading so that you can avoid unwanted losses of funds. Once you pass the test, you will be able to create a futures account and start trading. To do this, you will first need to transfer money to Binance and then transfer funds from Binance Spot account to Binance Futures account. If you have already bought cryptocurrency on Coinbase or you already have cryptocurrency in your crypto wallet, you can transfer money to Binance in a way you already know. Your funds will be credited to your Binance Spot account, and then you can transfer them to your Binance Futures account. If you don't have cryptocurrency yet, you can buy it with Binance P2P platform. I will tell you how to do it later in this video. So to transfer money from a Spot account to Futures account, you need to go to your wallet and select Fiat and Spot. After that, select the token you want to transfer to Futures account and click Transfer. Select USDM Futures and transfer funds to the Futures account. Also keep in mind that Binance charges a commission for futures trading, which depends on the amount of leverage. To reduce the cost of this commission, you can buy a small amount of BNB coin, about $5 to $10, which you must also send to a futures account. Now you can start trading. On the top left is the cryptocurrency pair you are trading. By default it's Bitcoin to USDT. Just below that is the time frame scale. On the right you will see the current price of the asset and a thing called the price deck. This deck displays all the current price offers at which people are willing to buy or sell the asset. To the right of this deck you will see a panel where you can select a trading mode. Leverage, set an order to buy or sell an asset at a certain volume for a certain price, and set take profit and stop loss markers. In this type of futures trading there are two modes of margin trading, cross trading and isolated trading. With cross margin your position will be gained by the full amount of your funds, so all of your funds will be used when entering the position. With isolated margin you will choose the size of your position yourself. I recommend you open positions as follows. First, choose a trading mode. I recommend using cross trading only if you want to enter a short position using all your funds with 1x leverage. In all other cases, in my opinion, it's better to use isolated margin. I also recommend entering all positions using a market order, because that way you will enter the position anyway, even if the price goes sharply to one side. Depending on the size of your position and the estimated time you will be in trade, you can set a take profit and a stop loss. Take profit is the price point at which your position will automatically close in profit. Stop loss is the price point at which your position will be automatically closed in loss. Stop loss is needed in order not to lose too much money, as well as to avoid liquidation. The liquidation price is the price at which your entire position will close at a loss, and you will lose much more money than if you had closed your position a few steps before the liquidation. In fact, in liquidation you will lose all of your money put into the position. I advise you to try opening a position yourself in any site for a small amount with 1x leverage to see how it works. While you are a beginner, I recommend you not to use a leverage higher than 2x, because this way you risk twice as much as in normal trading. You can use any trading strategy you find on the internet, but I recommend you to choose for yourself one of the following two. The first strategy is the safest one, and in it we use only short positions and 1x leverage. In fact, it's a reverse investment where we will profit when the price of the asset falls. But unlike investing, we don't own the asset itself, so keep that in mind. I apply this strategy when I understand that in the near future there will be a global market cycle change from bullish to bearish, and very soon all cryptocurrencies will drop in price. The only risk of this strategy is the possibility of making a mistake with market peaks and losing a lot of money in the long run, but I always have some extra funds for such cases, so I can re-enter the position at a new price, thereby averaging my entry point and protecting myself from liquidation. I recommend you to do the same and not to enter such a position with your entire deposit, but to use 50 to 60% of all your funds. Even better would be to collect such a position in parts, just as in investing, repeatedly entering short positions by 10 to 15% over a long period of time at a price peak, while saving some funds for the worst case. Thus, by combining this strategy with regular investing, it is possible to earn on cryptocurrency constantly, regardless of the current market. A much more dynamic investment strategy can be a 1% strategy. In this case, you enter a position for no more than 1% of your total funds on an isolated margin, mostly for short periods of time and with a leverage of 2x to 10x. This strategy also contains much less risk than most other strategies, because if you fail you will lose only 1% of your funds, but if you succeed you can earn 1% or more due to high leverage. I recommend this strategy to those who really want to make trading their full-time job, learning how to do it with minimal risk. Also, this strategy is better to use based on the fundamentals of an asset, but it takes a lot of experience and this topic requires a separate video. The last thing that I have to tell you about futures trading is that there is a demo mode where you can try futures trading without using your real money. This is a great mode for understanding the basics of futures trading that I talked about earlier, but I strongly recommend not to use it to learn trading, because there are a lot of disadvantages to this way of learning. Firstly, you will lose a feeling of trading with real money, which will undermine your confidence when you start using your own funds. Secondly, the prices in this mode are slightly different from the real ones, so there will be many situations where the price will move differently and you will have different results. This also ruins your experience, so don't spend more time on this mode than you should. Just go into it to open some orders and understand what you are really doing by pressing this or that button. To open this trading mode, you should go to testnet.binancefuture.com and register an account. This link is also will be in the description. Now we move on to the most sensational topic of 2021. You already know we are going to talk about NFT, because only lazy one hasn't heard of people making millions of dollars selling pictures on the internet. You may be wondering, why digital pictures are even worth anything, when you can just take a screenshot of it? Well, that's pretty interesting, because most NFTs really shouldn't be worth anything, because they have no utility. However, if NFT has any utility or special rarity, it can be worth thousands of dollars. The price of an NFT most often depends on what features it gives to you. For example, an NFT from this collection, called Moonbird, will give you an access to a closed community that explores other NFT projects at an early stage to make profit out of them. NFT doesn't always have a utility, but it can cost a huge amount of money. For example, CryptoPunks collection is the most popular and the most expensive NFT collection in the world, but it has no utility. In this case, its price can be justified by the fact that it is digital art. There are a large number of collections without much usage but with beautiful NFTs, because of which they can have a good price, which will not be justified by anything other than digital art and a huge belief of its holders. Community is one of the most powerful things in NFT space, because if project has strong, engaged community, then its collection can have a huge price and at the same time have no utility at all. But the main reason why one or other collection costs a lot is the utility it provides. As with any other cryptocurrency activity, there are several ways to make money on NFTs. The most profitable one, which will allow you to make your first money, is minting. First of all, let's understand what minting is. Minting is the process of generating and claiming NFTs using a smart contract. In other words, it's something similar to buying NFTs directly from the creators, but you are not buying a specific NFT, but sort of generating it yourself from components made by creators. This happens automatically, without your involvement, so you can influence this process in any way. Most of the time, this process happens randomly, thereby creating NFTs of different rarity. Minting is a transaction process for which a fee is charged. This fee is called gas, and it can range from a few cents to several $1,000s, depending on the network in which the NFT is created and the number of people who want to mint NFT at the same time. In addition to gas, you will often have to pay for the NFT itself, in the cryptocurrency of the network this NFT was created. The creators themselves set the price of the mint, and it usually ranges from 0.1 to 0.3 ETH on the Ethereum network, and about $100 to $300 on other networks. But sometimes the mint is totally free. In this case, you have to pay only for gas. If collection is good enough and NFTs from it have some utility, then usually after a mint the price of NFTs from this collection skyrockets, giving huge amounts of profits to those who were able to mint it. This happens because of several factors. Almost all NFT collections have a limited supply, and new units will never be created. Thus, demand for good collections always exceeds supply, and the floor price rises pretty quickly. Also, Also, NFTs can be a path to a closed community. It can give an access to a guaranteed mint of future collections. It can give the right to receive our NFTs for free as we airdrop for ownership or have some other value. It is important to note that it can be quite difficult to mint, because if a collection is really cool, there will be a huge number of bots that will be able to mint the entire collection before you even have a chance to click on the button. This behavior is bad for the price of the collection, which is bad for both the holders and the creators of collection, because most collections generate income for their creators every time an NFT from that collection is sold on the marketplace. This income is paid to the creators as royalty by the holders when NFTs are sold. To avoid this situation, when bots mint all the supply, the creators come up with different ways to sell their NFTs. The most common way is to give out whitelist spots to active project participants. A whitelist is a special pass for your Web3 wallet, which gives you the right for a guaranteed mint. There are many ways to get a whitelist, and they all vary, as each collection creator has its own rules for giving out whitelist. Usually, authors of collections give out whitelist spots for about 1/3 or half of all NFT supply, and the rest go to public sale, which means that everyone can try to mint NFTs. At the peak of NFTs popularity, most projects gave away whitelists by a regular raffle among a huge number of people. Anyone could perform simple tasks, like subscribing to the project's social networks, inviting a few friends, and get a chance to win a whitelist. With time, it became more and more difficult to get a whitelist spot, because more and more people interested in NFT projects began to appear, because even projects without any form of usage gave tens of X to those who were able to mint them. Now it can take you several days of grinding in Discord chat of a project to get whitelist. You can get it by chatting on Discord, making some ads related to a project, doing something special for a project, etc. Sometimes it's still just a random raffle, so it depends on requirements of creators. So now we understand what is minting and why it's one of the most profitable ways to make money with NFTs. But how to mint an NFT? Most often, NFTs are minting on creators' websites. To mint an NFT, you simply have to go to creators' website and click on the mint button. Then you connect in your Web3 wallet and pay in some money for gas and for NFT itself. After the mint, you will have your NFT in your wallet, but it would be kinda difficult to find it. To see your NFTs, you simply need to connect your wallet to the OpenSea or our NFT marketplace. OpenSea is one of the most popular NFT marketplaces, and the most of NFT projects are listed here. I remind you that you have to be very careful when you connect your wallet to a site. There are a lot of fake sites in the NFT space, so it's pretty easy to get scammed. But you may ask me a question, where to find good projects? Well, it's quite a complicated question, but most of projects are based in Twitter. And to be honest, most of crypto community is located in Twitter as well, so you can find so many cool crypto influencers there who talk about good projects. You can also just type best NFT projects in YouTube and watch some videos about it. But be careful, because you already know there are tons of scammers in crypto space, and you can easily find some advertised projects that can potentially be scams. In addition to minting, there are many ways to make money with NFT, such as play-to-earn games, NFT trading, airdrops, and many others. I will not cover each of them in detail, and will tell only about their essence. Actually, NFT is a huge topic, and I made more than $10,000 in 3 months from scratch, just grinding whitelists on Discord chats of projects, so I can do a separate video with full step-by-step guide if you want it. So how to make money flipping NFTs? To be honest, it's kinda gambling in most cases, but there are some ways to understand which projects are underrated and which are overrated. Firstly, look at the price of mint and the current price of NFT. If NFT's minting price was much higher than its current price, there are only 3 reasons why is that. First reason is that it's a dead project or a scam project, which is already abandoned by its creators. Also, it can be a project of a play-to-earn game, which cycle of life is already over, and there is no point in its NFTs no more. The second reason is that this project had not enough hype around it, and people simply not interested in it. It can also be because creators pushed very high price for the mint, and people decided not to mint all NFTs because of that. And the third reason is that it might be a very valuable NFT, which just don't have utility at this moment. For example, there are some play-to-earn projects that drop their NFTs into market so long before the actual game comes out. Or it can be an NFT of a brand, like Adidas NFT, that has no any utility right now, but can potentially have it in the future. It's quite complicated and risky, but sometimes you can find hidden gems and buy it before everyone else, so you should know it just in case. The second way to flip NFTs related to the news. There were so much cases when some NFT projects that had no utility at all suddenly blew up in price, because their creators decided to give some bonuses to its holders. The thing is that you can earn money on such news if you are pretty fast. If you have right information at the time, you can simply buy an NFT at the most start of its raising and sell it in a day with 2x profit. You can create such an info zone yourself if you subscribe to the right people and right NFT projects in Twitter, who post valuable information continuously. The third way to make money with NFTs is buying and holding NFTs of top collections to receive special airdrops in the future. This method is bound with risk of losing a lot of money if your NFT will fall in price and won't grow back. But if you buy it at a good time, you may make money on the airdrop it gives to you and on the price of the NFT itself. You should research each NFT project you are going to invest in yourself, because it always involves the risk of losing your entire investment. At the end of the day, NFT's price is based on people's trust and belief in the project, and on the value that creators of collection put into the NFT. The fourth way to earn money with NFTs is through a Premint. Premint is a site in which you can participate in projects mint beforehand. Actually, it is the basic airdrop platform where you can try to win a whitelist for an exact collection. I decided to make this a separate topic because there are a lot of projects that have free mint system and that are hosted on Premint, and you should know it if you want to start an NFT from scratch. To participate in Premint raffles, you need to create your own account and link your social media to it. Then you can just take part in every single raffle, so you can have better chance of winning a whitelist. But be careful, because any project can be a scam that will allow you to mint its NFT for free and then will get an access to your wallet's assets through malicious smart contract. The last way to make money with NFT that I want to tell you about is to create an NFT collection yourself. It's not free and you will have to spend your own money, and it may be a bad idea for a beginner who doesn't know how to make a successful NFT project, but it's still possible. I won't tell you how to create your own NFT collection in this video, because it's already too long and this information can be easily found on YouTube. So if you want to create your own NFT collection, just watch a video guide or ask me to make one in the comments. The next thing that I will tell you about is play-to-earn games. Actually, it's one of the most profitable niches for beginners, because NFTs of play-to-earn games are often worth quite little at the mint phase, but its price skyrockets right after the mint. Also, there are many play-to-earn games in which you can start from scratch and make your first money for any other niche in crypto. I will tell you about one of the most famous and profitable play-to-earn games for beginners, called The Sandbox. The Sandbox is a play-to-earn game where you can do some quests and earn money from it. The Sandbox has a season system, so you can play only when the game is open to players. There have already been 3 seasons, and in each of them you could earn from $60 up to $50,000 just actively playing the game. The last season introduced an innovation in the reward system, so there is a leaderboard where players who pass the game faster than others get in. If you are a professional gamer, you could try to speedrun the game and earn $750 or more from scratch simply playing 1 hour a day. This was an incredible opportunity for those who still study at school and have no income, because nowadays you can earn money playing a Minecraft-like game, and it's really amazing. Even if you couldn't rank in the top 1000 players, you can still make some money if you buy an NFT avatar, which will allow you to earn up to 97 tokens, which is about $100, and then sell your avatars and make a profit. There are some other play-to-earn games, so you can make your own research and choose those that you like the most to start making money. Now we are moving to one of the most prospective, risky and profitable niches of crypto world, which is IDO and ICO. IDO and ICO are a bit different things, but I will talk about them in one key, because in practice these processes are quite similar. In simple words, it is the process of initial sale followed by listing the tokens on the exchange. The point is that you have the opportunity to buy tokens before they go on the exchange, and that can bring you a lot of money, because often if the project has a good, useful product and its tokenomics is well balanced, then its token price will skyrocket right after the listing on the exchange, because of the excitement and huge demand for tokens of this project. To buy project tokens before listing on exchanges, there are special platforms that are intermediaries between projects and users who want to buy their tokens. These platforms distribute allocations to users, which allow them to buy project tokens. An allocation is the amount of money a participant can use to buy project tokens. The size of an allocation can depend on many factors, and each IDO platform chooses its own allocation amount for participants. Some platforms give the same amount of allocation to each participant, while others give a larger amount to those who have some privileges. But the fact is that not everyone has the opportunity to get allocation and buy project tokens before listing on exchanges, so there is a high competition for allocation. Usually allocations are distributed in one of 2 ways. The first way is a guaranteed allocation to each participant depending on the amount of money they have invested in the token of the IDO platform. This method is less profitable for most people, since they have to buy an additional token, which creates additional risks. Also, with this method, the allocation amount can be catastrophically small, even for those who have invested a huge amount of money in the IDO's token. The second method of giving out allocations is a raffle between all participants for their opportunity to buy project tokens. This method is much more profitable because due to high competition, the chance of winning an allocation is very small, but the size of the allocation is quite impressive, which brings a much larger profit in case of success. This is especially damaging for your pocket if you had to spend extra money to get this allocation. For example, buy an IDO token, which went down in value immediately after the IDO itself, and you lost money on the token rate as well. All of the above makes IDO a very risky way to invest, but at the same time a very highly profitable way, because the price of tokens of a strong project after listing on exchanges can increase 10 times or even more and bring you thousands of dollars in profit. You can find out about upcoming IDOs simply by visiting IDO sites such as CoinList, Polkastarter, Redkite, DAOmaker, Myer Launchpad and many others. But be careful when you want to participate in IDOs, as each site has unique rules and it's up to you to research them and see if there's a particular site that's right for you. Well, we have talked about a lot of ways to make money with crypto, and I think I have told you about the most important ones. Now I will make some additions to these methods that actually can be considered unique ways of making money, but they work even better in combination with the main methods I told you about earlier. You may have heard about mining and how people make millions from it, but the truth is that mining is dying day by day. Ethereum, which is world's second most popular cryptocurrency, started the transition to proof of stake, which made it impossible to mine Ethereum anymore. There is a clear trend of decline in popularity and profitability of mining, so I strongly advise you not to buy up video cards for mining and create whole farms, because it can become unprofitable in the near future. Instead, I suggest you pay attention to the addition to the main cryptocurrency earning methods that have replaced mining. So the most important addition to the field of tokenomics that you need to know is staking. Staking is the process of delegating your tokens to a validator who will use your tokens to make the blockchain workable. For contributing, you will receive rewards in the form of the same token or another specific token depending on the terms of the staking. Technically, this is quite a complicated process, but in practice it's pretty simple. And staking will help you increase your capital many times over, as the earning methodology is very close to a deposit in a bank. In practice, it looks like this. You give your tokens as a collateral to validator, which can be an exchange, a company or a single person. Then your tokens are blocked for a certain or flexible term, depending on the terms of transaction, during which you systematically receive tokens as a percentage of your deposit, minus the validator's commission. At the end of the staking period, your tokens will be unlocked and you will be able to use them again, as well as you will have the tokens earned during the staking period. This is very similar to a deposit in a regular bank, so you can earn interest on your capital by staking low-risk cryptocurrencies like Bitcoin and Ethereum, although the interest on their staking will be much lower than on more volatile altcoins. The only risk with staking is not being able to dispose of your asset when you need it, so you can lose a lot more money on cryptocurrency rates than you can make on staking. However, there is another type of staking, where you can withdraw your funds at any time, but usually under these conditions the percentage of profit is much lower and it can be also penalized. Nevertheless, I consider staking to be the most important addition to investing, because you can buy Ethereum or Bitcoin with the expectation of selling it in 10 years or more, all the while increasing the amount of the asset as a percentage, thus increasing your initial investment several times over. Staking is also very relevant in a bear market, as it usually lasts about 2 years, and the bull market does not go away in 1 month, so you will have time to withdraw your funds accumulated during the staking period and sell them at the top of the market, capturing even more profit than if you had just invested in cryptocurrency. So how do you use staking? You can stake on both centralized and decentralized exchanges, as well as wallets, so it's up to you to decide how and where to do it, but usually the terms of the exchanges are a bit more favorable. Remember that no validator, be it an exchange or an individual, can guarantee 100% safety of your funds, as anyone can go bankrupt or scam you, and you will lose your money, so consider all risks when you keep your cryptocurrency anywhere but cold wallets. By the way, to safeguard your tokens from these threats, you can choose to stake your holdings through a cold wallet or a hardware wallet. This process is known as a cold staking, and you can learn how to do it yourself if you want. Also, you can become a validator yourself, so you shouldn't pay extra fees to third parties, but you will need seed money, and the private server, so I would not recommend it to beginners. So I will show you an example of staking at Binance. Go to View on tab and choose the coin you want to stake. You choose the blocking period for the tokens. Note that the longer the blocking period, the higher the APR. The APR is the annual percentage of profit. So if you lock your coins for 4 months, you will get APR divided by 3. Usually, there are limits on the maximum possible amount of staking on Binance, so you can stake larger amounts in other places, such as hot wallets. Select an option that suits you and click Confirm. Now your coins are sent to the staking protocol and you will be rewarded every day of the staking period. The second additional way of making money with crypto that I want to tell you about is P2P trading. P2P trading is a type of trading in which you exchange your fiat money into cryptocurrency and vice versa using an escrow service, which can be an exchange or another platform. In this case, you earn on exchange rate differences when you buy and sell assets. For example, you are buying USDT, which price is almost equal to $1, 1% cheaper than it actually cost, and selling it afterwards for real USD, but you sell it also 1% more expensive than it actually cost. So you just repeat the cycle an infinite number of times and make money. There are a few things that make this process quite complicated and inconvenient, such as escrow fees and assets volatility. You have to know that this is a very competitive niche, because it's actually a money-making button that can be used by anyone. It can also be difficult to legalize this type of earning in some countries, because you have to use your own credit card for this type of trading, and not all banks allow this type of money transfers because they are not transparent. Anyway, you can dive in this type of trading if you are interested in it. This is a great way to make your first $1,000 out of about $200 to $300, because it doesn't require anything special except a small amount of money and time. I won't show you the exact P2P trading process, but I can recommend Binance escrow platform for P2P trading, because it has much more traffic than any other P2P platform that I have used. So if you are interested in details, you can watch a YouTube video about it. The third thing that I will tell you about is arbitrage trading. This is the type of trading when you are buying cryptocurrency on one exchange at a lower price and sell it on the other at a higher price because of price differences. This method of making money used to be very popular and profitable in 2017, but with time it becomes harder and harder to find opportunities for arbitrage, because exchange technologies are evolving and its bots that controls the prices are becoming faster and faster. It still can be a profitable way of making money, but it requires some knowledge and practice, so you can research it yourself if you want. The fourth niche of making money with crypto is actually a massive one, and it's called ambassadorship. An ambassador is a person who promotes a company by advertising or creating content about the project. In the real world, celebrities often act as ambassadors, promoting products of various brands and receiving a percentage of sales or a significant fee for it. However, in the crypto industry, anyone can become an ambassador for a crypto project and earn a huge amount of money from scratch. For this purpose, many projects create ambassadorship programs, for participation in which there is usually a reward. In most cases, the reward for active participation in ambassador program is a guaranteed allocation of project tokens at IDO with the most profitable conditions, or free tokens airdrop before listing on exchanges, which can bring huge earnings to program participants. Projects such as Moonbeam, Forta, Galaxy, Goldfinch and many others have given away their tokens to ambassadors for amounts ranging from $2,000 to $50,000 for very simple tasks. An ambassador can handle different tasks depending on the needs of the project, but usually they are writing articles, creating video and audio content, translating content into other languages, advertising the project on social media, testing the project's product, bug hunting, etc. Ambassadorship is the best way to start earning from cryptocurrency for beginners who are not yet familiar with the world of cryptocurrency. All it takes is time and persistence, and you literally risk nothing, which makes this the safest and easiest way to start. To become an ambassador for a project, you need to follow the project's social media, but usually all ambassador programs take place on the project's Discord. Sometimes projects hire ambassadors on Twitter using the Google form, so keep a close eye on all the social media of prospective projects. You can search for such projects on Twitter and with videos on YouTube. Well, this was a quite long way, but now you know the most of ways to earn money with crypto, because I have told you about the most important ones. The rest of the things that I haven't told you about are either quite little or just small parts of the methods I have mentioned already, so it's safe to say that now you are able to make money with cryptocurrency. Of course, you may need some practice to become successful, but it's just a matter of time. I hope you enjoyed this video and you have known something helpful from it. If you want to help me back, you can subscribe to my channel, like and share this video with your friends. And I see you in the next one.